Hey, welcome to my San Diego housing market update for July 2024. Home prices in San Diego continue to set record highs. Inventory is steeply on the rise. Demand has fallen off noticeably so, and different markets in San Diego are starting to establish their own little bitty market. We're starting to see markets in neighborhoods that's different from the general consensus. So in this video today, we're going to talk about the overall San Diego market, and then we're going to talk about some San Diego markets where you can potentially find some opportunity if you're thinking about buying a home. Now, I'm J.R. St. Julien with the St. Julien Real Estate Group of eXp Realty, and welcome to my housing market update. Okay, so as I mentioned, we are continuing to set record highs with respect to prices here in San Diego. The median home price now sits at $950,000, and that's when you include both detached homes and condos and townhomes. Last month, it was at $922,000. So that's a significant bump despite some of the slowdowns that we're starting to see in certain areas of the county. So it's interesting to see that that median home price is still being pushed in this beautiful city of San Diego. Now, closed sales are down 7.6% year over year, and inventory is up year over year, 44% across the board, but there's a significant delta between detached homes and condos when you're looking at inventory. Specifically, detached homes are up 28.4% year over year, while attached condos, townhomes, etc. are up 78.4% year over year. That's a significant rise in inventory. And we're starting to see that have an impact, even though it's not reflected in that increase in the median sales price that I just reported. But we are starting to see it, especially in certain neighborhoods. But before we get into the certain neighborhoods, let's talk about some of the other things that are happening. So across the board, demand is falling. For whatever reason, buyers are tired, or most of the buyers that wanted to buy this year or were sitting on the sidelines last year jumped in the game, found their home in the first 4 months of this year. Because since April, the level of demand has noticeably dropped. It's hard for me to find stats that support that outside of just a reduced number of closed sales, but I'm out in the market every day and I feel it. I have listings, I can see it. The number of showings are decreased. So the demand level has been reduced. Now, simultaneously, every month of this year, we've seen double-digit increases in inventory when compared to last year. So, for example, anywhere from 12% up to 30% from January all the way through June, every single one of those months had a double-digit, somewhere in that range, increase in inventory relative to last year. So now we have a little bit less demand, a lot more inventory coming on. It's coming on slowly, so it's not being piled on, but it's coming on slowly, but it's hanging around a little bit because that demand has fallen off. So what we're starting to see right now is across the board, months of inventory for most communities are now over 2 months of inventory. And remember, when we're talking about months of inventory, we're talking about a statistic that measures the combination of demand and supply. And essentially what it's saying is if we bring no more supply to the table based on the demand, it'll take this much time to gobble up all the current supply. So as months of inventory go up, that means there's more supply, maybe a little bit less demand, or you could have maybe higher demand, but even higher supply, or less demand, same level of supplies. So it's measuring a combination of those two. And regardless, basically as the months of inventory go up, it basically says that there's gonna be more competition out there if you're selling a home, and there's gonna be more homes available if you're looking at buying a home. So across San Diego, we're sitting at 2.3 months of inventory, but there are some specific markets in San Diego where we're seeing months of inventory north of 3, north of 4 months of inventory. It's been a long time since we've seen months of inventory north of 3 and 4 in multiple areas. There's always outlier communities, like you go out to Valley Center, Alpine, some of those communities on the exterior of San Diego County, they're kind of more in the rural areas, a little bit longer to get to, one highway to get in. So those communities naturally have less demand, and they typically will carry a higher number with respect to month of inventory. But now we're starting to see certain communities in the city are carrying high numbers of months of inventory. And I'm gonna put out what I think is going on just based on the communities, and I'm gonna talk about some of those communities here in a second. So what I think is going on in the areas of the city that are either coastal, where people own second homes, investment properties, coastal investment properties, basically not traditional residences. It's not their main house, it may be their second, third, or whatever house, or an investment property. We're starting to see those neighborhoods show high levels of months of inventory. Now, in previous market updates, I've mentioned we're seeing a little bit of a differential between detached home numbers and attached home numbers, and that's because the attached home inventory that has come onto the market is much higher than the detached home inventory that has come onto the market. But in some of these different markets, it's flip-flopped, it's different. Some of them have single family home months of inventory that are north of 3.5 months of inventory, or even 4 months of inventory. Some have the condo community, so it's very specific. But just to rattle off some of those communities where we're seeing that, and you're gonna see the trend as I name some of these communities. We're talking about North Park, Mission Hills, Hillcrest, Pacific Beach. We're talking about Ocean Beach. We're talking about downtown. All of those are heavy combination of just traditional investors. And then as we get into that coastal, Pacific Beach, Ocean Beach, La Jolla, Del Mar, Solana Beach, Encinitas, Northern Carlsbad, and Oceanside Coastal. Those are interesting numbers. So we got some kind of very luxurious beach cities, and then also some areas I probably wouldn't have thought was going to be impacted as much. But if you think about it, there are a lot of investment properties in especially Oceanside Coastal. I think what we're starting to see is many investors or second homeowners are deciding to pocket these gains that they've gained, which have been tremendous over the last X number of years. And that increase in sales activity in those specific markets are now creating softer markets in those areas, more inventory in those areas, but also more opportunity if you're thinking about buying. And the reason I say that is because over the last 2 years, in 2022 and 2023, we have had a momentary dip or creation of opportunity in the market, just momentary, and then it's popped back. And we are in one of those markets in certain areas, because all the areas are not the same. Again, this is a neighborhood market now, which is very, very different. Typically, when I report about the San Diego housing market, I could just report about the standard numbers, and that's pretty much what you see in every neighborhood. But right now, today, neighborhood by neighborhood is different. But as I was saying, there's opportunity being created. And the reason why I think this is going to be temporary in nature is because, yes, we're getting increased sales from what I believe to be second property and investment property owners, but we're also starting to see the interest rates drift down. And the Fed is also promising to cut interest rates by the end of the year. And we're seeing the global economy, some of the other major economies around the world have already started to cut their Fed funds interest rate, or whatever their version of the Fed funds interest rate is. And we're the ones kind of lagging behind. And it's the election year. So I believe all of those things will come together to start to trend the interest rates, which we're already seeing. They're slowly drifting, which is good. I don't want fast, I want slow. We're sitting in like the mid to high 6s right now. And the expectation is that we might potentially continue to slowly drift down. And as that happens, and we get through maybe this cycle of increased investor or second homes owner sales, we may see back to good old standard San Diego housing market, much more increased competition. So that's my update in a nutshell. And I always like to take that data and that information and apply it for those that are thinking about buying or selling a home. So if you're thinking about buying a home, very simply, you may have some opportunity right now that may not be there in the future. If you can afford it right now, and it's something that you desire to do, get off the fence and get into the market. This is a great place to own a property long term. You will never go wrong in the San Diego market. And I believe right now there's some great opportunity presenting itself, and I think it will continue to present itself through the early months of the fall. But typically the market picks up in October, slows down in August and September. So if the interest rates continue to drift down and you can financially do so, I recommend you take that leap of faith, because it's one of the best investments that you will ever make. Now, if you're thinking about selling a home in San Diego, we kind of missed the big sales season, that spring season, but people still are looking for homes. People are looking at buying homes. They're looking in all different areas. But if you are thinking about selling and you're in one of these areas that have a lot of inventory and you don't have to sell, maybe now is not the best time for you to sell. Prices are still being pushed up, but in those areas where those months of inventory is on the rise, we are seeing some price depression. So if you need to sell or you're trying to sell, sell to get to some destination in the near future, then you probably want to sell as soon as you can, because I feel like that pricing pressure will continue in those areas until the demand and supply work itself out. That could take a month, that could take 2 months, that could take maybe to the end of the year. I don't think it'll go beyond the end of the year, but if you need to get somewhere fairly quickly, you probably do better selling sooner than later. Now, that being said, if you have no timeline and you're in a market where the numbers aren't in your favor, then you might want to just sit back and kind of let things play out until the interest rates tick down a little bit, and then it'll be a good time to sell. So hopefully that information was helpful for you, and it was something that you can use as a resource if you're thinking about getting into the San Diego real estate market. My name is J.R. St. Julien. If you have any particular real estate questions about your particular situation, any scenarios that you're thinking about, or maybe some real estate goals that you're looking to achieve, I would love to schedule a time to chat with you. You can find me on Google. There's an easy way to schedule on my calendar using my calendar link. Phone number will be after this video. Send me a text, send me an email. If you have questions, I love to talk real estate, so feel free to reach out, hit me up. Let's talk some real estate. Take care.